Stock Play of the Day Overtime is an educational program. Any statements made by Ally Invest employees are not intended to be or should be considered investment advice, a recommendation to buy, sell, or hold a security, or a recommendation to adopt an investment strategy.
Welcome to the Stock Play of the Day Overtime Edition. On Monday's Stock Play of the Day, we talked about Nvidia, symbol NVDA. Today we'll discuss, did we score or did we fumble? Hello, my name is Brian Overby. I'm the Senior Options Analyst at Ally Invest. We are taping the overtime edition of the Stock Play of the Day on a Tuesday. The markets are open and the markets are rocking in Nvidia. On Monday's show, it was taped at noon Eastern time. So I actually have a chart of the underlying stock. At noon Eastern time, the underlying stock was trading right around 543, and that's what this red line is representing on the chart. Now, on Tuesday, they had some positive news and the stock has skyrocketed. So thought we'd discuss about exiting the trade. And let's look at what the initial trade was, and then we'll look at how we might want to exit that trade using the Ally Invest option chains. So if we look at the trade that we were talking about, NVIDIA right now, it was up $25 at one point in time. Right now, the market is closing. It's up $3.76. We were doing a long call spread. In other words, we were hoping that the underlying stock would go up, and we wanted it to go up beyond our short strike. Our short strike would be strike B. Now, that stock has done that, but it did it dramatically on the opening, and now it's kind of came back to almost where it started at the beginning of the day. So in general, when you have that type of run up in the underlying stock, you would just want to close this trade and try to get out of the trade as profitable as possible. So that's what we're going to look at doing on this overtime edition, even though it's a little bit early in the week. But we didn't expect that big of a run up in the underlying stock. Now, everything that we do here on the Stock Play of the Day is not meant to be a recommendation. We're just trying to learn here, and that's our major goal. So if you were paper trading it, we'd want to make sure that you're looking at the same expiration that you were trading in, which is the October 16th expiration. So we taped this yesterday. That was the 5th, Monday. Now we're on Tuesday, the 6th. There's only 10 days remaining to expiration. And the underlying was at 543. We see it right now at 549. So it is up $5 from when we initially placed the trade. Now, the spread, as we talked about on the show, is not going to move as fast as if we bought the option outright. If we had bought the underlying option outright on the show, we saw that the 540 long call was trading around $19. And now we see it at $22.50 on the ask, as I'm highlighting here on my option chains. So you would have got a bigger run up, but you had a lot more risk. $19 means you're putting in $1,900 for every one contract that you buy. So we spread it off. We bought an expensive option contract and we sold an expensive option contract. And if we look at it on the spread, we paid $250. If we could have filled at the midpoint on Monday, $250 was our total risk then. And we now see it trading for $275. It is up a quarter. We had a 5-point swing, but at one point in time, the underlying stock, if we go back and look at it, and I'll just take a real quick peek at it, was as high as 565. So we basically had over a 20-point run from the actual opening price. We'd had the huge news event that happened, and boom, we went all the way up to 565. So if that was the case, you don't want to look a gift horse in the mouth. You put the trade on Monday. You want to try to close it as soon as you possibly can when you get that type of run up, because you don't expect the stock to continue on up. You never really know, but ultimately, how would we close this trade? So if we were looking at the trade, we see it's at 275. We click the trade button. We go into the right rail, which is the order ticket here on the Ally Invest option trading platform. And for every place that it says buy to open, that means we own that underlying stock. We'd want it to now say sell to close. So we click sell to close. And then everywhere it says sell to open, we would click buy to close. So want to make sure we have the same expiration. We do, the October 16th. We are buying to close the 545 strike. We are selling to close the 540 strike. 275 would be a nice price. That's where I'd want to get at least to get out of the trade to be a little bit profitable on it. And I would enter that at a net credit now to the account for $2.75. So quite simply, just preview the order, send it down to the trading floor, and you are working in order to close your long call spread on Nvidia. That's it for this edition of the Stock Play of the Day Overtime. Please don't forget to click subscribe and ring the bell, and we'll see you on this Monday Stock Play of the Day Overtime edition at noon Eastern Time.